Jim Rickards, shooting war with China more likely than you think. The mainstream media narrative about the US-China trade war implies that Trump is on a highly damaging ego trip and China holds all the cards. The exact opposite is true. Trump has ample financial warfare weapons including tariffs, penalties, bans on direct investment, improved cybersecurity, forced divestiture, and freezing of assets. Meanwhile, China has almost run out of room to impose tariffs. Further, they will invite retribution if they try to devalue their currency further. China's vulnerabilities run deeper than that. The US-China trade war comes in the aftermath of a Chinese Communist Party conference that made Xi Jinping dictator for life and enshrined his doctrines on the same level as Mao Zedong. Once Xi got these powers, he proceeded on a disastrous policy course that has resulted in a slowdown of the Chinese economy, higher debt defaults, lost investment opportunities in the US, and declining hard currency reserves. The knives are now out in Beijing. Reports are circulating that Xi's opponents are questioning his judgment and the wisdom of expanding his powers at such a critical time. Many are starting to blame Xi for the trade war almost as much as they blame Trump. Xi still has torture, firing squads and concentration camps at his disposal, but the notion of a unified, coherent leadership structure in Beijing is now seen to be a myth. Trump will keep up the pressure, he never backs off and always doubles down. It will be up to Xi to blink and acquiesce in many U.S. demands. The U.S. will win this trade war because Xi does not want to lose his throne. Yet there will still be material damage to the global economy and lasting animosity between Xi and Trump. But there is more to the US-China dispute than trade. Yes, headlines and TV interviews are dominated by talk of the trade war. That escalating confrontation is a big deal, but it is not the only flashpoint in US-China relations, and not even the most important. China is as much concerned about a military confrontation in the South China Sea as it is about the economic confrontation in the trade wars. China dredged sand surrounding useless rocks and atolls in the South China Sea and converted them into artificial islands, and then built out the islands to include naval ports, Air Force landing strips, anti-aircraft weapons, and other defensive and offensive weapons systems. Not only are the Chinese militarizing rocks, but they are trampling on competing claims by the Philippines, Vietnam, Brunei, Malaysia, and other countries surrounding the sea. China is claiming control based on ancient imperial arrangements, and argues that the West and its South Asian allies stole the territory from them. The answer is that both the ancient claims and the theft narrative are open to dispute. More to the point, the world has developed rules-based platforms for resolving these issues without military force. The U.S. is guaranteeing freedom of passage, freedom of the seas, and the territorial rights of allies such as the Philippines. Incidentally, I was at Norfolk Naval Base last week delivering electron financial warfare with China. There was a hurry-up feel to it, a definite sense of urgency. I got the impression that something must be up. So far, the US-Chinese confrontation has been about naval vessels passing in close quarters and surveillance aircraft being harassed by fighter jets. The risk of such tactics is an accidental collision, a rogue shot fired, or a command misunderstood. Any such incident could lead to retaliation, and there is no telling where it might stop. Trump is not someone to back down, and Chinese leadership does not want to appear weak before the U.S. That is especially true at a time of great economic uncertainty. Communist Party leadership is desperate to maintain the support of the people, or else it risks losing the mandate of heaven. China does not want war at this time, but diverting the people's attention away from domestic problems toward a foreign foe is an old trick leaders use to unite the people in times of uncertainty. Rallying the people around the flag is a tried and true method to garner support. If China's leadership decides that the risk of losing legitimacy at home outweighs the risk of conflict with the United States, the likelihood of war rises dramatically. Jim Rickards, protect your money as China, Iran, in Korea, and Russia preparing for financial warfare. Jim says bad actors are using cyber brigades to hack their way into critical U.S. infrastructure, and he says to prepare for asymmetrical war. There are many bad actors out there who are preparing to inflict as much damage as possible to the power grid and other critical infrastructure, including the stock market. I would put Russia, China, Iran, North Korea, and a few others at the top of the list. Russia and China at the top of the list, but Iran certainly has good cyber warfare capability. They re-employing what they call cyber brigades that spend all their time basically hacking into the critical infrastructure systems I described above. It's a good bet that all of these systems have already been penetrated. No one can beat the US in a conventional war right now. China, especially, is catching up, but it's not ready at this time. That's why they refocusing on attacking America's critical infrastructure vulnerabilities. This is called an asymmetric response. They want to fight in the area where they can win, or at least inflict enormous damage. Look at all the crisis spots around the world. North Korea, the Persian Gulf, South China Sea, Syria. If any of them start to escalate, you're going to get an asymmetric response function. For example, if President Trump sends the 7th Fleet into the South China Sea, China might unleash an attack of the U.S. power grid, creating chaos in the United States. Or it could launch an attack on the stock market, or conduct other forms of financial warfare. Financial warfare is not the warfare of the future, it is already here. It's going to become a bigger threat as time goes on, too. Financial warfare is actual warfare conducted through banking and capital markets channels. It is not mere economic policy, as in the case of so-called currency wars, trade wars, or embargoes. When nations engage in financial warfare, individual investors can be collateral damage. If China tries to attack the U.S. by closing the New York Stock Exchange, for example, it will be tens of millions of Americans who will suffer an immediate loss of wealth as prices plunge and accounts are locked down or frozen. Financial warfare attacks vary in their degree of sophistication and impact. At the low end of the spectrum is a distributed denial of service (DOS) attack. This is done by flooding a target server with an overwhelming volume of message traffic so that either the server shuts down or legitimate users cannot gain access. In such attacks, the target is not actually penetrated, but it is disabled by the message traffic jam. The next level of sophistication is a cyber hack in which the target, say a bank account record file or a stock exchange order system, is actually penetrated. Once inside, the attacking cyber brigade can either steal information, shut down the system, or plant sleeper attack viruses that can be activated at a later date. You have probably noticed that unexplained stock market outages and flash crashes have happened with increasing frequency. Some of these events may be self-inflicted damage by the exchanges themselves in the course of software upgrades, but others are highly suspicious, and the exact causes have never been disclosed by exchange officials. But in 2010, the FBI and Department of Homeland Security located such an attack virus planted by Russian security services inside the Nasdaq stock market system. Here is a formerly classified map showing cyber attacks by the Chinese government against U.S. interests. Each dot represents an attack. Notice the concentration of attacks against technology targets in San Francisco, financial targets in New York, and military and intelligence targets in the Washington, Virginia area. The most dangerous attacks of all are those in which the enemy penetrates a bank or stock exchange not to disable it or steal information, but to turn it into an enemy drone. Such a market drone can be used by attackers for maximum market disruption and the mass destruction of Americans' wealth, including your stocks and savings. In this scenario, an attacker could penetrate the order entry system of a major stock exchange such as the New York Stock Exchange. Once inside the order entry system, the attacker would place large sell orders on highly liquid stocks such as Apple or Facebook. Other system participants would then automatically match these orders in the mistaken belief that they were real trades. The sell orders would keep flooding the market, and the selling pressure would feed on itself. An attack of this type would be launched on a day when the market was already down 3% or more, about 550 points on the Dow Jones Index. The result could be a market decline of 20% or more in a single day, comparable to the stock market crash of October 1987 or the crash of 1929. You would not have to trade anything or be in the market during the attack. You would be wiped out based on the market decline even if you did nothing. Another type of highly malicious attack is to penetrate the account record system of a major bank and then systematically erase account balances in customers' deposit accounts and 401(k)s. If the attack extended to backup databases, you or other customers might have no way of proving you ever owned the deleted accounts. During a financial war game exercise at the Pentagon a few years back, I recommended that the SEC and New York Stock Exchange buy a warehouse in New York and equip it with copper-wired hardline phones, handheld battery-powered calculators, and other pre-internet equipment. This facility would serve as a non-digital stock exchange with trading posts. Orders would be phoned in on the hardwire analog phone system. This is exactly how stocks were traded until recently. Computerized and algorithmic trading would be banned as non-essential. In the event of a shutdown of the New York Stock Exchange, by digital attack, the non-digital exchange would be activated. The U.S. would let China and Russia know this facility existed, as a deterrent to a digital attack, in the first place. If our rivals knew we had a robust non-digital plan B, they might not bother to conduct a digital attack, in the first place. Some analysts respond to such scenarios by saying that the U.S. has cyber warfare attack capabilities that are just as effective as our enemies. If Iran, China, or Russia ever launched a cyber financial attack on the U.S., we could retaliate. The threat of retaliation, they claim, would act as a deterrent and prevent the enemy attack in the first place. This is similar to the doctrine of mutually assured destruction, or MAD, that prevented nuclear conflict between the U.S. and Russia during the Cold War. This analysis is highly flawed and gives false comfort. MAD worked during the Cold War because both sides wanted to avoid existential losses. In financial warfare, the losses may be existential for the U.S., but this is not true for Russia, China, and Iran. Because they are far less developed than the U.S., their markets could be destroyed, and it would have little impact on their overall economy or national security. The technological warfare capabilities may be symmetric, but the potential damage is asymmetric, so the deterrent effect on China and Russia is low. There is essentially nothing stopping Russia, Iran, or China from launching a first-strike financial warfare attack if it serves some other national strategic purpose. What can you do to preserve wealth when these cyber financial wars break out? The key is to have some portion of your total assets invested in non-digital assets that cannot be hacked, wiped out, or disrupted in financial warfare. Such assets include gold, silver, land, fine art, and private equity that is usually represented by a paper contract and does not rely on electronic exchange trading for liquidity. For gold, I recommend you have a 10% allocation to physical gold if you don't already. As for alternative investments, like fine art, there are many investments that will cost you less than $1,000 to get started. As an investor, you have enough to be concerned about just taking into account factors like inflation, deflation, Fed policy, and the overall state of the economy. These days you have another major threat looming: financial warfare, enabled by cyber attacks and force multipliers. The looming crisis you read not hearing about. All the talk about Russian tampering with the 2016 presidential election, which is vastly overstated by the way, diverts attention from the more fundamental problem, the vulnerability of America's critical infrastructure to cyber attack by hostile actors. When I say critical infrastructure, I mean the power grid, hydroelectric systems, nuclear power plants, energy pipelines, railroads, air traffic control systems, internet, and stock exchanges. These are large, complex systems that affect the entire country, and they are computerized and automated like never before. The scale and degree of interconnectedness are increasing, which creates great vulnerabilities. If any of them fail, it could lead to massive disruptions, panic, and social unrest. Look at the chaos that followed Hurricane Katrina in 2005, for example. That was an interesting case study in what I call the veneer of civilization, and how quickly it can break down under emergency conditions. Imagine what would happen, for example, if a virus implanted in the control system of a hydroelectric dam opened floodgates to inundate downstream targets, killing thousands by drowning and destroying bridges, roads, and agriculture. Meanwhile, hackers have targeted nuclear power plants. Last year alone, government sources say a dozen U.S. nuclear power plants were targeted, possibly by Russian hackers. Now, the operations of most nuclear power plants use older analog systems, so they aren't vulnerable to cyber attacks. They aren't connected to the net. It's one case where older and less sophisticated is better. But hackers are extremely creative, and increasing digitization of these plants could allow hackers backdoor entry points into critical operating systems. I don't need to spell out the possibilities. Or think of what would happen if the power grid went down for an extended stretch. Imagine what it would mean for air travel if air traffic control systems were down for a long period. That's just for starters. Without electricity, how do you pump gas? Pumps have electric power, so gas stations wouldn't work. How would trucks get the fuel to transport food to supermarkets throughout the country? Stores would run out of food in no time. Traffic lights wouldn't work, so huge traffic jams would paralyze cities. Credit card readers wouldn't work, ATMs wouldn't either, the banks couldn't open, etc. Most businesses wouldn't be able to function, leading to significant economic losses. You get the picture. We got a small taste of widespread power outages in August 2003, when a massive outage in the Northeast affected about 45 million people in 8 U.S. states. Official sources said that a squirrel ate through a wire, which caused a power surge that led to cascading failures in the entire system. Next thing you know, tens of millions of people were without electricity. Most people got their power back within 2 days or so. But what if the system was down for weeks or longer, and what if it happened throughout America? I am not sure I believe the official story about a squirrel causing the incident. But the larger point is that isolated events like that can have widespread consequences for the entire system. The electric grid is a system of systems, connected through communications networks of increasing complexity. Over the next 20 years, data flowing through the system will far exceed the amount of electricity flowing through it. And that makes it more vulnerable to disruption. It might sound like I am trying to frighten people here, but I am not. I am just trying to get them to prepare. A lot of people think the experts have things under control, that they can contain any damage, and that any problems will be very temporary. None of those assumptions is true. First off, these systems can, and do fail. They fail with greater frequency, and most people understand. They are highly interconnected, and they crash into each other in unexpected ways. And they can get out of control very fast. In fact, it's the experts, the people who I interact with, who are saying, no. You don't understand. This is going to go down. We are highly vulnerable. We don't know exactly when. We don't know exactly the extent. That's very hard to predict, but we are certain that these systems are going to fail, and anyone who has not prepared for that is being extremely short-sighted. So the experts are very worried, while everyday Americans are complacent. It comes back to complexity theory. At some point, systems flip from being complicated, which is a challenge to manage, to being complex. Complexity is more than a challenge because it opens the door to all kinds of unexpected crashes and what are technically called emergent properties. Their behavior cannot be reduced to their component parts. It's as if they take on a life of their own. Traditional approaches rely on static models that bear little relationship to reality. They tell you where you've been but don't necessarily tell you where you're going. Complexity theory lends you greater insight into where you're going. I've studied complexity theory intensively for decades now. It has had success explaining phenomena in fields such as climatology, seismology, and many other dynamic systems. I've also taken the insights of complexity theory and applied them to financial markets, which are perfect models of complex systems. That's how I analyze risk in financial markets, and it's very powerful. Applying complexity theory to market sets my analysis apart from the mainstream. Below, I show you how to protect yourself against hackers and other forms of financial warfare. Read on.